Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on December inflation, softer numbers, base effects at play. Ahead of the release of December 2025 inflation data last week, the National Bureau of Statistics, NBS, working with the Nigerian Economic Summit Group, NESG, announced changes to how Nigeria's Consumer Price Index, CPI, is calculated. The adjustment was made to align Nigeria's inflation measurement with international best practices, including guidelines from the IMF and ECOWAS. Under the new approach, inflation is rebased using the 12-month average, with 2024 CPI average set at 100 rather than a single month. This change helps avoid artificial spikes in inflation figures. NBS explained that using December 2024 alone as the base would have led to a sharp jump in December 2025 inflation due to the statistical base effects rather than actual price increases. The revised methodology therefore provides a more accurate and realistic picture of underlying inflation trends. Consequently, headline inflation for December came in at 15.15% year-on-year, down from 17.33% in November 2025, the ninth consecutive decline mainly driven by lower food inflation and base effects from the new 2024 base year. However, on a month-on-month basis, prices rose 0.54% in December, lower than 1.22% month-on-month in November 2025, indicating that price increases slowed in December compared with the previous month. The moderation can be attributed to stabilizing foreign exchange rates, softer energy costs, and exceptional strong peak harvest influences that delivered abundant supplies of staples, which more than offset the usual upward pressure from festive season demands as households stocked up for celebrations. Food and non-alcoholic beverages, restaurants and accommodation services, and transport were the main contributors to the headline inflation, accounting for a combined 9.64%. Conversely, food inflation, which accounts for about 45.3% of the headline inflation basket, eased sharply to 10.84% year-on-year in December 2025, down from 14.2% in November 2025. On a month-on-month basis, food prices fell by 0.36% in December, reversing the 1.13% rise in November, highlighting how peak harvest surpluses outweighed festive demand pressures, with staple price declines providing significant relief to households amid year-end preparations. The decline in prices of items such as tomatoes, garri, eggs, potatoes, carrots, millet, vegetables, plantain, beans, wheat grain, ground pepper, and onions fresh drove the slowdown. Similarly, core inflation, which excludes food and energy prices, moderated to 18.63% year-on-year in December 2025 from 20.59% in November 2025, an increase of 0.59 percentage points. On a month-on-month basis, core inflation eased to 0.58% in December 2025 from 1.28% in November. This was driven by slower increases in service-related items, supported by better FX liquidity and lower import costs, though some upward pressure emerged from non-volatile sectors. States with the highest year-on-year inflation include Abia, 19.3%, Ogun, 18.8%, and Katsina, 18.7%. The states with the lowest year-on-year inflation are Sokoto, 8.6%, Plateau, 9.1%, and Kaduna, 10.4%. Urban inflation stood at 14.86% year-on-year, with a month-on-month rate of 0.99%, while rural inflation was at 14.56% year-on-year, with a month-on-month rate of minus 0.55%, highlighting a shift where urban areas saw slightly higher annual rates, but rural areas experienced actual price declines monthly, possibly due to stronger harvest impacts in agrarian regions. Also notable is the impact of the base year change from 2009 to 2024, which has amplified the apparent year-on-year declines, though underlying pressures persist in seasonal items. Additionally, the negative month-on-month food inflation signals potential deflationary trends in staples that could ease household burdens if sustained. We anticipate month-on-month headline inflation moderating further in January 2026, thanks to the post-harvest surpluses, stable FX, and softer energy costs. However, unfavorable base effects from January 2025's sharp minus 2.83% month-on-month deflation will likely push the year-on-year rate up temporarily before it resumes falling sharply in subsequent months as these technical factors fade. The year-on-year uptick is largely statistical, not a sign of renewed pressures, given the ongoing month-on-month slowdown and food relief through late 2025. Investment strategies to hedge against inflation. With inflation continuing its welcome downward path, now's the time to put your money to work rather than letting it idle in low-return savings accounts that barely keep pace. 1. prioritize competitive yields on safe options. Shift to high-yield savings accounts, money market funds, or trusted digital platforms offering rates well above current inflation levels. Treasury bills in the secondary market remain a standout choice, delivering strong, low-risk returns accessible from as little as 100,000 naira through banks, brokers, and investment firms. Pair them with quality commercial papers for flexible short-term liquidity. 2. Build a currency shield. In an environment of unpredictable naira volatility, dollar-based assets provide essential protection. Consider Eurobonds, dollar mutual funds, or domiciliary accounts to safeguard purchasing power against exchange rate swings. 3. Look ahead for growth. For those with a long horizon for higher risk tolerance, explore undervalued equities in resilient Nigerian sectors, consumer goods, or telecommunications, or select U.S. stocks with solid fundamentals positioned to benefit as inflation eases and economic recovery gains momentum. Stay proactive. Inflation may be cooling, but smart allocation ensures your wealth grows ahead of prices. Review your portfolio regularly to capture the best opportunities in the shifting landscape. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS 07082463747. Stay blessed and have a great week. Bye.